Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, April the 19th, 2013. We'll be looking at 19 major markets that we track for you at PerfectStockAlert.com so that you know everything that I know moving into the week ahead. Yesterday we did long-term charts. Today we're doing the short-term charts, and this is where I actually mark where I would be looking at selling certain particular points. And there's something you should know about these charts. Whenever I mark it with a blue arrow, it indicates I'd start selling immediately. Whenever I mark it with a black arrow, it indicates that I would sell if it was confirmed. If we saw selling the following day, in other words, if tomorrow or Monday's market activity were to take out this low point on today, even by 1 penny, I'd start selling that and keep set the stop right here off the high of that sell signal. Right now on this particular chart, our stop is way up here. We're doing this because we see a lot of downside potential, a lot of bouncing is going to happen here and there, and you can look for different entry opportunities, but the main story is going to be you have a major market crash that's developing. You don't know it in the US yet, but it's coming. So we'll be looking at this different ways. The main thing to show you on this chart, looking at the Australia market, we're going to start off with, you can see that you have this low point here, no hammer candlestick formation developed. And this is important because typically when you find support, strong buy pressure will come in, and that's what causes that support, and you're bouncing off of that. When you don't have that, you're bouncing just because you're bouncing. You've sold off substantially, you get an oversold condition, and you get this little bounce. What you do in that situation, you look for this bounce to form a shooting star. When you get some kind of a signal, sell pressure, something like that, like you saw here, whenever you see that, you start saying, okay, where's it at? And if you're in a downtrend, if you're in a bearish market, you will find resistance, and the best entry opportunities will be at the 50-day moving average on the short-term charts. This red line right here. So you have one here, one here, one here. You're getting all the signs that this is developing into a bearish market. You're getting resistance at this level. You're breaking down lower lows, lower highs. Everything makes perfect sense. Now, we pull back here and we form this little formation here. In a situation where you have a more bullish market, there's a way to call this a bounce. So it calls for a bounce, actually, and that's fine. There's also a case, and it's rare, but there's a case when markets are breaking down, and you'll see this little signal here, and shooting star is when it's at the top of a pattern. You run up here and you get the little sell signal like that. When you've sold off and you get that signal, it typically calls for a bounce the other direction, and it's not a shooting star, it's an inverted hammer. However, there are certain cases where it's indicating something else. It's indicating that you're going to break this line of support, and that's going to happen. That's what this is telling me. So you may, in fact, get a bounce off. That's fine. You can get a bounce next week, and then you're going to turn around and you're going to take this low out. So that's important. Do not get bullish on this market. All right, let's clean that chart up a bit. All right, if we get a bounce, how high of a bounce would you expect? Not much, because I'd find resistance at the 50-day moving average right here. So this red line would be where I'd be looking for my resistance. Also, you can note that your ultimate oscillator is at 44.45. You don't have much upside before you get to that resistance line and getting oversold again, overbought again. And typically in a bear market, you will see that you won't get these conditions here, overbought above the 70 line. You'll start peaking out at the 60 line. It's actually just below it. And you'll notice that again and again on the chart. So whenever you start to see that developing, it's also confirming that you're seeing a bear market mentality, a bear market sell-off kind of going on. We'll talk about more on the mentalities and kind of a different perspective later. But right now, the main thing, again, stay bearish. First U.S. market we'll be looking at will be the Dow Jones Industrial Average, and you'll know if you've been watching our videos for the past few days, we talked a lot about U.S. markets are really lagging the overall sell-off that we're seeing globally going on in the markets. And this is important for many different reasons, and we'll talk about them all over these videos. But today I want to bring to your attention a couple of different things. Number one, you've had a very small amount of a pullback here and a hammer candlestick formation forming above the 50-day moving average. In a typical uptrend scenario, that would be your buy signal. A lot of people are going to use this as that. They're going to see that and say, oh yeah, if we bounce a little bit higher tomorrow, I'll take it as a buy and I'll go long. And you can get a bounce out of that. However, in this scenario, I wouldn't, and I wouldn't because this is the only chart showing that. In fact, what you're seeing in other charts are not hammer reversals, and you're not getting confirmation. So, in fact, I wouldn't do that. And another thing to point out here, and I've shown this on other charts last week, showed you when you're getting this pullback and you see that the ultimate oscillator signals something that your price isn't doing, that's important. Here you can see the low point down here below the 50 line, and then this low point over here above it. So you're getting this little downtrend line here on the momentum, and yet you low points here, looking at the closes, lowest close here, and then the lowest close here. You can see you're still uptrending here. So what this is telling you is that you have a bounce coming. However, it's also another way to analyze that is to say that price is going to bounce and then justify what you're seeing up here. It's then taking out this low. So again, I would see this as you have potential for a bounce here, but I wouldn't get long because you're going to end up going lower. And you're going to start to see this break down. And one of the things that you can learn when you're watching the charts from your mentality is how it starts to sell off. Typically, it'll be the first move starts and people are like, yeah, it's not a big deal, have low volume selling, this and that. You'll see some attempts at buying, and then they'll start to break down and people realize what's going on. You start to see more drastic selling until people finally get to a point where they're just like, we won't touch anything, and it just falls off a cliff, so to speak. We'll just see a lot of that later, but right now it's important. You start watching how the candlesticks are developing, what stage of the selling are you in, and that's important. Okay, so right now, looking at this chart, yes, you could see a bounce early next week, but again, you are going to take out this low, which means you're going to come back down here and close below this 50-period moving average, which marks the beginning of a breakdown of this bullish trend. And this, again, one of the few charts that are so bullish on the longer term and short-term charts. So again, when they're not being confirmed by the charts, don't trust them. Quick little look here at the French CAC 40 index. This one's going to be very tutorial for you, very helpful because it shows you a lot of what's going to happen in the U.S. market. So your pullback here started very slow, got a little kind of bounce sideways. Really didn't know which direction you were going, and then you started to get more drastic, closing below the 50-period moving average, bouncing back above it, so forth and so on. Then you get some better sell days. You get 1, 2, 3 days to the downside here, and then you bounce up here again. Then how many do you get? 1, 2, 3, 4. You're starting to see an increase in the bearish case, the bearish mentality in the market when you start to see that. You also notice the actual size of the candlesticks growing larger here than we've seen before here. So that's again showing that mentality is how it's breaking down and starting to build more and stronger of a bearish case. Again, any bounce here that, and you expected this bounce anyway because you had sold off below the 30 line here. Any bounce here is expected to find resistance at the 50 line, the moving average. Let's start looking for a sell signal like you have right here. If you get something like that, then I'd again mark the chart saying this is an entry opportunity here. Right now, still short, tight stop way up here actually, not all that tight. Just give lots of room to bounce around. We're just not changing our case. There's lots of bounces that happen whenever you get close to the 30 line here, here, here again. This is just normal. It's just no market falls straight down or rallies straight up. So you should learn to expect little bounces here and there, and that's fine. The main thing you should learn though is remember back in the time that we were analyzing these charts, we saw this pullback here, and we saw another one happen here, and we told you guys at that time you had this low point here was lower than this seen over here. Again, showing that divergence situation where you have, yes, it's calling for a bounce, and it's telling you you're going to see a bounce, but it's also warning that you're going to take out this previous low, which is way over here. So you can see now we're actually traded below that point. So again, your bounce scenarios happen at the oversold condition below the 30 line, but it doesn't mean anything other than just a bounce and look for another short opportunity. And again, no hammer candlestick formation at the bottom. This is not a true bottom. This candlestick is actually indicating that you have continuation to the downside coming, and substantial. Looking now at the Milan index, or the MIB, this one we've been bearish on for a while. Here's the main story. This high point here that peaked out, here, hit it and bounced off, hit it again, bounced off, hit it again, bounced off, came close to it, bounced off again at that 50-period moving average, and now we're coming up here to bounce at that point again after hitting that 30 line. Makes sense, but again, I would expect this resistance to still be there, so I would expect any little bounce to be short-lived. Look for another short opportunity and stay that way. The advanced stop is way up here. Keep an eye on this. Let it have room to run, but in the end, it's going to end up taking out this low here. This is not a hammer candlestick, so you're still going to press lower. Looking now at the German DAX composite, you can see massive sell-off here. Again, we called this the same way as we did before. We saw this low point here, this one here, both of which were lower than this one here, so we knew that we're going to take out this low close here, and then we talked about that when it happened, and you also said that you can see a bounce at that point, but it's just a bounce, and you're going to end up going lower. No hammer candlestick, no true bottom, no hammer candlestick, no true bottom. Now we've come down here, no hammer candlestick, no true bottom. You do have 6 consecutive days to the downside. That is above average, so 7, 8, this and that can happen, but no market falls straight down. Eventually, you're going to get a bounce. That bounce is just a bounce. Just let it bounce and then get short again. That's what we've been doing. It's what we've been talking about. And in this particular case, you also have, if you clear this chart up, you can see that you do have another argument for a little bounce because you have this low point here, and the current low point here is trending up. So somebody could say that's a bullish divergence, saying that we've oversold to the downside here, we're going to bounce. But it just says we're going to bounce. It doesn't mean that it's the bottom of the sell-off. And again, there's no hammer candlestick, so it's not the bottom. But anyway, we'll get to that later. Clean that chart up. Someone's going to ask, what kind of a bounce do you expect? I can't ever really tell you that. It depends on the activity in the market, the mentality. how bullish or bearish they are. If we get news over the weekend, it's something bad on Europe, something of that nature, you may not bounce at all. You may just simply sell off substantially, and then you'll see this guy play catch up, and he'll move down lower. So I wouldn't try to trade on a bounce. I wouldn't try to counter trend. When your trend is moving down, you have lower series of highs, lower series of lows. Your best trade is going to be working with that trend, using the little bounce here to sell. The strength of the move will be on favor of the downward move. So the upside is a smaller gain potential than the downside. Every single time you're going to see that again and again and again. So just keep that in mind. And again, if you do get a bounce, I would expect to find resistance at the 50 period. Quick little look here at gold. Been bearish on this position for a while, and you can see why. You got the massive move to the downside, really telling, and then you have this little bear flag formation, just moving in a bullish upward trend here, but it's within a certain pattern that we know as being just a temporary move. You got some people covering short positions. You got some people trying to call a bottom. Keep an eye on this. When we close below this line here, it's just toast, and that's going to be happening relatively soon, because you can see the ultimate oscillator is already at roughly the 50 line. So bouncing up here to the 60 line, just below the 70, is going to be where you start to peak out. So it's important to keep an eye on that. Again, this is where you found your peaks before. Here, and expect it to happen again. Looking now at the Hong Kong Hang Seng Index, you can see a very clearly defined downtrend, been bearish in this position for a while. And once you close below the 50-period moving average, you start to find resistance at that point here, nice sell signal here. Opportunity there, we didn't actually take it, and you can see that you had this little bear flag form right here. Same thing you're seeing in gold, and then you break to the downside, and then you bounce again, and that's fine. You get another sell opportunity. And then we marked this one yesterday with the black arrow indicating that if you are actually to break down lower the following day, being today, then we'd start selling at that point as well. But it didn't have it, and she bounced to the upside, so we just leave that alone. Let the watches bounce, and keep an eye on the red line right here, this 50-day moving average. You get a move at that level with a nice sell signal, nice shooting star kind of signal. That would be a great entry opportunity on that position. I'm keeping an eye on that, looking for that sometime next week. Also, I want to point out this little green line here. This is the 200-day moving average, and you have a sell signal at that line. We've talked about this before. We were seeing that develop and other things, and we told you that that's a very, very bearish condition, indicating that the market is giving you sell signs at the 200-day moving average. The only way that's going to happen is if you're headed for a bear market, and that's important that you grasp that concept. I know we're not seeing it understood by the masses in the U.S. markets, because we'd see more selling if we had, but it's coming, so pay attention to it. The India Bombay Stock Exchange, the BSE chart, looks a lot like you're seeing with China, and this is important. You close below the 50-day moving average, and you'll notice you have this sell signal at the 50-day moving average. As soon as you close below it, you got a sell signal. And that was what I was kind of showing you on the 200-day moving average with the Hong Kong Hang Seng Index. The same thing. It's indicating the same thing. It says you're going to start to find resistance at this level. So you bounce off there, you hit it, you get another sell signal. Now, if you had been trading during this time period, you hadn't seen any of this other part of this chart, you'd be looking at it going, well, why would we get a sell signal at 50? We're in a bull market. No, the chart's telling you what's going to happen, not the news, not your friend. Not look at the actual chart. The chart's saying sell here, and then again, and then again. And now you come back up here, and what are you going to find? You're going to find resistance at this line right here. That's why you run up here, and then the next day you did it again. You didn't go anywhere. Overbought condition on the ultimate oscillator above the 70 line. I'd be looking for a sell opportunity. That's why I marked this here with the sell line that you're seeing right here. And again, I want to point out, this is the green line, the 200-day moving average. You got a sell signal right here. Look at this chart start to tell you, indicate to you that you're going to see price move away from this green line, just like you saw it back here, here, and here. Looking now at the Japan iShares of the EWJ, this is kind of a greedy trade for me. I didn't have to take it, and then we actually avoided it for a while. And then we just said, okay, look, there's no way that Japan's markets can actually continue upward if the global markets are crashing. So we took that as this sell signal here, went ahead and took an entry opportunity there. It's a tough call for multiple reasons. One, you've got the Bank of Japan dumping tons of money into the market, and that's going to be providing some lift on any bounces. You're going to see some lift here on the Japan iShares. Again, that won't sustain itself if global markets go into a bear market, so that's another point to take. But whenever you have a situation like this, you're also counter trend trading, because the trend is still short term, still moving to the upside. So actually, I'm trying to counter trend trade, and that means the odds of my success are lower whenever I do that. So tight stop on it, keep an eye on it. See, right now it's still working, but as long as we stay below this line right here, this 1144, 1 cent above that, 1145. So as long as we stay below that line, it's fine. But if we get stopped out, then I just walk away from it. Looking now at the FTSE, or the London Financial Times Index, you can see we're very bearish in this position. Same reasons as we talked about before. You saw it close below the 50-period moving average. So that was a sell opportunity. We bounce up here. What do? We quickly run away from it again. And now we might bounce up to it again. I expect you to find resistance there at that level. You are actually going to take this guy down lower. You don't have a hammer candlestick here, here, or here. None of these are true bottoms. We can't say anything back here and back here. So you're going to be taking this out. Another more telling indication here would be the fact that you have this shoulder formation and this head formation. Actually kind of made a sloppy head. And then we come up here and we do it again, roughly finding the peak at the same level as typical pattern of the head and shoulders formation. But you can take this low close here, this low close here, and draw a trend line there. That would be the neckline. And then say, okay, once we close below that, we will have confirmed this bearish divergence. You came real close to doing it, which you didn't do. You backed away. So the next time you come down here, we will close below that. At that point, you take the high point of the actual formation of the head down to the neckline, measure that distance out mathematically, then subtract it from the breakout point. Tells you how far you got to go. Roughly the same distance from here, and it was going to be down here. So we have a lot further to go. Okay. Looking now at the NASDAQ, you can see very bearish conditions closing below the 50-period moving average. You weren't doing it before, you are now. That means the mentality is changing. That means you're starting to become more bearish than you were before, closing well below it. And then we bounce up here again. No hammer candlestick at this bottom here, and therefore it's not a true bottom. Now, if we get a couple of days to the upside, all we're going to end up doing is forming a head and shoulders formation. We've got the first shoulder here, closes to the low close, and then up to the top, and then back down to the low close, and then another one. Take us up to the 13,260 level. That's fine too. Put us filling this gap here and forming another shoulder. We roll over and start coming down. We draw the neckline off the low closes, and you can see very dramatic negative slope to it. As the more negative the slope is, the more bearish the signal would be. So again, substantial move to the downside still pending here in the NASDAQ. Again, the U.S. markets are not keeping track with the global markets that are selling off much faster. So again, eventually they're going to wake up to this reality, and they're going to have to play a game of catch up, and that means they're going to go fast to the downside. So keep an eye on it. Looking now at the XOI oil index, this one we actually advanced the stop on. We talked about the short position here, told you a good short opportunity again here as well, and then now we've advanced the stop. We had the stop way up here off the high, and now we've moved it on down to this point here. May get stopped out, that'd be fine with me. If we get stopped out, then I'm just going to wait for new entry opportunity on the short side, of course, but I'm just trying to book some profits here on this particular position. In case anybody's wondering why you're concerned with an opportunity to get long here or something like that, you're not a chance. Somebody had mentioned, I don't know how many times I read it, people say, well, I don't pay attention to technical analysis. Okay, so you don't pay attention to what price is doing. That's fine. So how then do you know when you are actually have an opportunity to buy below true fundamental values? Well, a lot of people actually apparently don't even listen to fundamentals. So if you're not listening to technicals, which is price, you're not listening to fundamentals, what are you using? Is it like I don't know, an 8-ball, magic 8-ball or something? I have no idea what they're using. The method we use is simply look at price activity, uptrend or downtrend. This is obviously in a downtrend, lower series of highs, lower series of lows, nothing here to do but sell. And then if you look at the fundamentals, the economy is not showing signs of strength, therefore you shouldn't expect to see oil making new highs because the demand is just not there. Okay, so fundamentals, technicals all support the downward move. Looking now at the dollar US dollar UUP fund, you can see that in this particular chart I've already talked about yesterday, I'm not trying to take this from the long side or the short side. I'm just leaving it alone for now. Quick little glance here at the Russell 2000 Small Cap Index. A lot of things I could tell you about this chart. A couple of them right quick. You got this first shoulder formation, bounce up here to the head formation. You talked about this back when it was happening, and you pull back down here, and now you come up here, and you've started to form a kind of cattywampus scenario. We said that this isn't quite right. We're not going to actually call that as a head and shoulders formation, but you basically get the same sell signals, lower series of highs. We had to take that opportunity to the downside. If you were to bounce here and start to move up higher, you could really redraw this chart and say, all right, that we could say this was the shoulder, this is the head here, and this is down here, and then you draw. That would make more sense. It would seem to work out better. It had to be symmetrical, and that's why I'm readjusting that chart like that. But the main thing here, again, we're looking, this is a very bearish signal for the markets. Let's set that aside and say, okay, what else do you got that's a little bit clearer? We can say, look at this low point here, and look at this lower point here. You can see that you're trending down. Another divergence formation here. Low close here. Actually, it's here. And then a low close here. You see it's trending up. It's basically telling you that you're going to end up breaking lower. We told you that back when it was happening. And taking out this low. You've come down, filled some of that, but you haven't actually taken out this low yet. So this little bounce here, nothing more than a bounce. We can probably find resistance here at the 50-period moving average. Have to get short in that. Again, looking for us to go lower. Again, no hammer candlestick, no hammer candlestick. We're obviously breaking down here and showing the topping patterns. That makes perfect sense. And again, you're seeing this globally. Looking now at the SPX, or the S&P 500 Large Cap Index, note the close below the 50-period moving average and no hammer candlestick, showing no support that was there before. And again, once you can close below the 50, you're again signaling a breakdown in the pattern. And then on the same time period, you have this first shoulder formation, the head formation, and now if you get a bounce and they get to roughly the same level, we got 1570, and then find rolling over, which I expect you wouldn't see much more upside than that, simply because you're already at the 55 line. A little more upside puts you at the 60, in 70, and then you start rolling over again. So right here, looking for a short makes a lot of sense to me. And again, a very bearish condition is where it's negative slope on the neckline. Measure the distance out. You can say all of this is going to be gone. So where we tested this low down here. Silver, again, it's just confirming the gold chart. That's one of those things I've talked about before. You always want to look at silver and gold confirming one another, and in this case they clearly are. Massive move to the downside here, and then a bearish flag. This is very concerning to anybody who's looking at this as being an indication of where the global economies are headed, because you have massive selling, then a bear flag, and this is telling you that you have more selling to come. But when you start off with really big selling like this, it's really warning that there's a crash coming that you've not anticipated, the size of which you've not anticipated. And we'll get to that later, but that's something you keep in mind. Looking now at the Toronto Stock Exchange, the TSX, you've pulled back down below the 30 line here, and you're bouncing off that. That's fine. You can get a little bounce here. This is where I'd look for resistance, right here at the 200-day moving average. This is more advanced than what you're seeing in other charts. And remember, we talked about this before. You sold off from here. You start getting sell signals at a point on what used to be the support line. You're now getting sell signals there. That's warning you that you're starting to break down. Now you're seeing the same thing, sell signals at the 200 period. I told you that was warning you're fixing to break down, and you start to do that. Now if you bounce back up to it like you did over here, you're going to find resistance at the 50, and then here you would find resistance at the 200. You're going into a bear market, no questions about it. Looking now at the VIX, or the volatility index, this runs the inverse, the opposite of the S&P 500. Very important to check this chart out. Main thing here, I've talked about this last week on the Friday video, that you are in an uptrend here in the VIX. That means that you should be seeing a downtrend develop or in play on the S&P 500. At that time, we were seeing conflicting signals. I told you to trust the VIX, not the S&P. In this scenario here, the same exact condition. What we're doing here is the bullish uptrend. You can see that we have higher series of highs, a higher series of lows here, here, here. When we pull back, we're going to start to find support, best entry opportunities at or below the 50-period moving average. That's where you want to be doing your buying on the VIX. That means your downside potential is not that great on the VIX because you're really close to that. You're going to pull back to roughly this point. If I were to get a hammer candle, something like that, really clear entry opportunity, that'd be a great trade on the long side, looking to come up here, fill this gap here and this gap here. That also tells you, if you invert it in your head, you can say, okay, we only have a little bit of downside potential here in the VIX. That means we only have a little bit of upside potential on this bounce for the S&P. So it's important. Again, it's a very tight scenario here. I wouldn't try to trade long the S&P 500 or any major market in the U.S. right now. Looking now at the Wilshire 4500, or the EMW, nothing new I can tell you about this chart. It's very bearish. We talked about that back here. We got stopped out. We went short again after I got the sell signal at the top here, and we broke down, closing below the 50-period moving average. Hadn't seen that before. And now you find resistance at that level. Selling off below it again. If you bounce up to it, you're just going to find resistance again, and I would sell it again. So what do you do with this chart? You sell it because it's making lower lows right here, and it's going to make lower highs. You've got one here, and you can't take it out. So we're just getting to watch this thing and look for short opportunities. Look for this to be taken out. No hammer candlestick formation. This is not a true bottom. It's got a lot of downside potential. Another thing to think about whenever you're looking at the sell-off is the size of the sell-off. Look at the size of this candlestick formation. It is massive, and it's the start. You know it's the start because it's off the high point. You know it's the start of the sell-off, and it's a substantially large candlestick. That warns that there is a big crash coming that's not even started, because you don't start with your largest candlestick. It's not how a sell-off happens. You actually start with the smaller ones, and then you grow from there as the mentality starts to grow more and more bearish, and that's what causes that. So it's important that you take note of these signs. These signs are telling you there's a huge crash coming. I can't stress that enough. I know it sounds like you're just kind of getting over-exaggerated. No, I'm telling you, this is what I see on the chart. This is why it's so important that I bring it to your attention. If there's anything in this video that I have talked about regarding divergences and using the ultimate oscillator to spot divergences, things like that, that you don't understand, or anything else in our videos, you can go to the technical school here, and we have videos teaching every single concept that we use at perfectstockalert.com, as well as fundamentals. So you can be sure to check that out whenever you like, 100% free. All we ask in return, please refer a friend. Last but not least, it's the weekend, so enjoy it. Congratulations on all you guys' gains to the downside, and stay bearish. There's just nothing to do with this market. It's breaking down, and you need to recognize that as soon as possible and get on the right side of the trade. God bless, take care, enjoy your weekend, be safe, and God bless Boston. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.